All right, welcome to the Greater Lansing Real Estate Market Report for August 2020, presented here by Century 21. We'll go ahead and get started in this to look at some of the data. I think it's kind of been interesting how COVID has basically played out, since the real estate market is typically about 3 to 6 months slower to respond to anything that happens in the market. We are just now sort of seeing the impacts of COVID and what the future of the real estate market will sort of look like in the next coming months. So our August 2020 market statistics, here in our leftmost column, we have our 2020 market statistics, and we compare that to the August 2019, and then we have calculated a change of percentage year over year. In August 2020, we saw an average sale price of 194,696 and those 20 cents. This is up quite a bit from August of 2019, which was at $183,087.87. The change in our year over year statistic there is 6.34%. So we're seeing an overall increase in the average home sale price, and that's pretty typical. We've seen that for the last probably 3 to 5 years or so. We've seen house values and house prices continue to increase. Now, on the opposite end, when we're looking at the number of sold units, we're basically talking about the number of homes that sold. In August 2019, or on August 2020, we saw 685 units, and in August 2019, we saw 721 units. And that's actually a decrease. We're down by 5% in terms of the number of homes sold. It's pretty, these dynamics have been playing out for actually quite a while, even before COVID. We've seen a lot of increase in the value of home prices, while subsequently a decrease in the number of units being sold on a monthly basis when we compare year over year. A lot of times what's happened is that the average sale price has significantly outpaced the number of homes sold, which has caused a growth in the real estate market overall for the last I'd say about a year to 2 years or so. We've seen these dynamics kind of play out, and we'll kind of explore these a little bit further as we get into later slides here. Now, the inventory of homes in days is at 52.8 for August 2020. We saw 86.7 for August of 2019. Now we're down 39.1%. And so what the statistic is telling us is that this is the number of days it would take to sell the current inventory of homes on the market. And to give you some context, we typically consider about 5 to 6 months worth like a balanced market. So we would want to see anywhere from 150 days to about 180 days to symbolize we're in a balanced market. Of course, here we're at 52.8 versus last year we were at 86.7. So what this means is that inventory is significantly down, and the rate of sales is up higher. So we're seeing this, it's down 39.1%, which could be good or bad depending on what side of the market you're on. So if you're a buyer, it's kind of bad news because it's going to be very difficult for you to find a home. If you're a seller, it's good news because it means it's not taking as long as typical to get your home sold. What would normally be anywhere from a 6 to 9 month process to get your home sold from the day it's listed to the time you're actually closing on the sale would be about 6 to 9 months. Here in this market, you're seeing close to 90 days on average, and it's not uncommon for people to get an offer in the first week their home is listed and close in 45 days later, 60 days, and they're done. So just to give this all context, though, the monthly doesn't mean a whole lot. We're going to take a look at some of the August 2020 trends over a year based on a rolling 12. And so what a rolling 12 does is it looks at it accumulates the month. So it would be August and then the previous 11 months before August. So we're basically looking at a full 12 months here. So in August of 2020, looking at the past 12 months there, we saw an average sale price of 187. We saw a sold listing at 534, and we saw inventory days on average was actually 26.7. So we're, when we're comparing this to August, we see a lot of the same data here. Of course, this isn't down as dramatically here. In terms of the inventory of days, it's only at 12.1%, where on the previous slide it was at 39.1. So that's a significant difference. But here, an increase of sale prices at 7.3%, and the number of units sold is down 6.9%. Comparatively speaking, that's exactly what we saw in August. So it's not really a surprise there. But what might be a surprise is if we hop over, look a little further to the right here on this slide, and we're actually looking at this chart. Because this chart is kind of interesting, is this is the average homes sold per month based on a rolling 12. So we have a trend line basically right here along the 550. You can't really see it because the slope is pretty much zero, meaning we're not increasing or decreasing. It's pretty much staying level in terms of our trend line there. But what's interesting is this in this chart is that for 2019, if you start over here in August of 2019, we've actually seen a decrease in the average homes sold per month on an average basis. And then we kind of level out here. We're playing this game where we go up, we go down. But right here we have COVID. This is where COVID happened. The entire state shut down. We stopped showing houses, which really meant that nothing was being sold. So, it wasn't really a surprise that we bottomed all the way out, that our average suddenly became, like somewhere around 300. But what is interesting to me is after that, we saw a huge dramatic jump here in our average in the month of July there. We actually surpassed 750. Even in the previous year, we've never been that high. And even up into August, we were real close there, obviously by 6.9%. We were real close there to last year's August. Now, this I think can be attributed mostly to the fact that there was all this built up demand. So in April, May, we weren't able to show houses weren't selling because the entire state shut down, right? If we all remember this with COVID. And so we weren't really able to sell anything. We weren't really able to complete any transactions. And so that had a dramatic effect. And I think what you saw here is this giant buildup that came in the months of July and August when the market finally started to open back up. And so I think what we're seeing is these higher numbers in these months. They're as high as they are actually simply because the previous months were so low. And so that's making up some of the difference. So don't get fooled, because I think there might be some thought that, hey, the market's fine, it's recovering, it's back to where it was, it's normal. And we'll look at how it's going to play out, I think, in the next couple months, obviously, as we do these market reports. But it's going to be really interesting because it's hard to argue that, that the market's recovered, it's fine, it's totally okay, versus, well, there was all these, 2 months that people missed out on homes, and it had to be packed into, July and August before school and all those other stuff. That's traditional of when we see an increase in the market before it starts to drop back down for the seasonality of it. So, and we can kind of look at that, I think, when we explore here our Lansing real estate market volume, which again I did based on a rolling 12. So the market volume takes the number of homes sold and multiplies it by obviously what those homes were worth to calculate the total value, or the summation, I should say, of all these homes that sold, the value of all those homes, and the summation of them over the last 12 months to get a total value of the real estate market that we're looking at. So the total real estate sold volume. In August of 2019, we saw, this is obviously billions of dollars, so we saw 1.211 billion dollars, and in August of 2020 we saw 1.205 billion dollars. So there's obviously a decrease of like $7 million roughly that we saw. And so in other words, the real estate market this year got a lot smaller, right? By $7 million. I shouldn't say a lot smaller, but it got smaller by $7 million. If we look at this chart, we can kind of visualize it here on the slide, and we can see our sales volume against our trend line. And the trend line there is obviously showing a decreasing slope, meaning that we're headed towards a decreasing market. Now, of course, it depends how you plotted out the data. Of course, if I had probably shown 2018 all the way up until August of 2019, I think that trend line would have been closer to being flat, because there was so much growth that occurred in 2018 and 2019 that makes up for this dramatic decrease that we saw obviously in May of 2020. So you can see again that we bottomed out here in May of 2020, and a lot of that I think is due to obviously zero homes were selling. So the total real estate market, what normally would have been maybe $120 million in a month, or $100 million in a month of sales, was basically gone, and we've eliminated that. And so you can see that that's going to have a dramatic impact. That's going to have a 10, 20, 30% difference that we're looking at when we're looking at this real estate market. And so, but I think what's really interesting here, and this is kind of the main point that I want to drive home, that I think we're going to see over the next coming months here, is that even though we bottomed out here, is that we kind of see this slope here starting to form. That is an increase. That is almost exactly the same slope that would have been here, that was here in terms of growth that we were seeing over the last year until COVID occurred. So, I think by the time a year comes around, we're able to possibly drop those months of COVID that occurred, and even if we take those out, we start to see a real estate market that is closer to where we were pre-COVID. So it'll be really interesting to see how big of a difference we're talking about in this real estate market, because of course we're only talking, when we're talking about like $7 million, we're talking, what's that, 35 homes, 30 homes. It's not a huge amount of homes that we're talking about when we're only talking about a $7 million difference. So it is interesting to see that the market has kind of come back. I think what we'll have to be continuing to see is if this trend continues up, then I think that'll signify that the market is going to be okay. It's going to continue to where it was prior to COVID. But if we start to see a decline, then of course it could have the initial jump here in these months, or this perceived recovery could have simply been because of the fact that all of our home sales had to be pushed into a single given month or 2 months, where normally the real estate season would have been from March to August. It's now only July to August because of the impact of COVID. So just to summarize all this up though for you, and to let you know what you can expect. So if you plan on buying a home, you're a home buyer, you're in the market, expect to have a tough time. When you find a home, expect it to go in days, expect it to go above asking, and expect to compete with several other buyers. It's going to be tough. There's a few driving forces that are causing this, but one is obviously low interest rates, which continues to increase demand for real estate. But there's also shortage of supply. And I think we're seeing that supply decrease in this post-COVID environment as more people are a little bit hesitant to put their house on the market and that sort of stuff, which is pushing this equilibrium higher, which is causing the higher sales prices. So moving here over to the right, if you plan to hold, if you're a homeowner, you're not even thinking about buying or selling, it's not even on your mind, you don't even care, how is this relevant to you? Well, your home's value is going to probably continue to increase because that's what we're seeing in the overall market. And this could be a good time for you to refinance, depending on, how much equity you put down and what your interest rate is. But it's very possible if you say when you purchased your home maybe 5 years ago, you put 3.5% down because you had an FHA loan, so you're making those PMI payments somewhere between $100 to $200 a month. This is a good time that you could possibly save You could drop that PMI because your home's equity value is now above that 20% mark, because your home's value increased so much. And yeah, you were paying a little bit of the principal down and stuff, but I think the main driver would be that you now have over 20% in the home, and you can drop that PMI payment. And so it may make sense for you to talk with a lender, and refinance and look at, does it make sense, the closing costs that we might have to pay, or the loan origination, to go ahead and refinance versus what we're going to save here, on the $100,000, $200,000, or $200 per month that you might be paying in PMI. If you're planning to sell, I say it's good news for you. Could be kind of bad news, in the sense that you have to be prepared to have a place to move into if you can't find a home in time, because you're probably going to list your home on the market. It's going to sell within a week, and then you're going to have no place to go, unless you negotiate it into the contract. Because if you're looking to sell, you also need to buy, and you're going to have a tough time finding a house on the market. So be very, very careful. If you can afford it, I would recommend that you list your house for sale, or that you already buy a place before you list your house for sale. That way you don't have to play any tricky, timing things, because it's going to be a challenge. Otherwise, you may find yourself getting pushed into buying a home that maybe you don't necessarily want, but is the one that's available, and you're now stressed for time. So if you plan to rent, you're like, hey, I'm not buying. These house prices are crazy. I don't want to buy. I know I want to stay out of the market. I'm too afraid. Bad news for you is expect your rent to increase too. As housing values rise, rent increases as well. So if you think that, hey, I'm saving, I'm going to be okay by not purchasing a home, the reality is that you're going to have a just as equally as a tough time anyways finding a rental, as well as making it affordable. So if you're planning on buying or selling a home, get in touch with us today. You can give us a call at 517-244-6044, or visit us at DolinskiGroup.com to learn more about us. Happy to help you out, see what we can do for you. If you're just looking to get a home's value, market analysis, or you're ready to get started. That's all for now.